Okay, good evening, everyone. Welcome to our MQ Traders webinar tonight on uncovering the future stars of the Asian market. I'm Robin from MQ Trader and the host for tonight's event. So before I get started, can I just have a quick mic test first? So if my voice is loud and clear, can anyone type 1 in the chat box to let me know? So if my voice, can you hear my voice? If you can hear my voice, can you type 1 in the chat box? Okay, so just a brief info about MQ Trader first. Our full name is Malaysia's Quantitative Trader Group. We are a group of traders that collect quantitative data, which is normally only available to large financial institutions. Then by using this data, we have developed the MQ Trader stock analysis tool. Then we also made it available to our MQ members for free because our goal is to empower them to make quicker decisions with greater confidence during their stock trading journey. A moment. Can you guys try to chat again? I think I enabled it already. Okay, thank you, Andrew Tan. So let me continue. Okay, so other than the MQ Trader stock analysis tool that I mentioned just now, we also have MQ E-Trade, MQ Points Accumulation, MQ Affiliate Program, and many more. So if you want to enjoy free access to all these MQ Trader system, you can do so by opening a trading account through M Equities LYH team or TA Securities JCCL. So if you are interested in any of the benefits of the account, you can type 5 in the comment box if you are interested. So in this system, like I mentioned just now, you can view a lot of information of each stock at a glance, like live market quotes, our exclusive MQ trading signals, and even up to 10 market depths. So I believe that this info is very useful and can facilitate your trading journey greatly. And also this is our MQ Trader stock analysis tool. So inside this, you can get buy and sell signals in just one click. And you also can do a backtest analysis to test whether this buy signal has a high accuracy of success rate. So for our MQ members, you can visit the link if you want to use this system for free. And for non-MQ members, remember that you can get access to this system free by opening a trading account with our selected advertiser as shown on the screen. So if you are interested, as usual, you can type 5 in the chat box or scan the QR code and submit your contact details to us. Then the respective team will guide you on the next step later. And just to highlight, for today only, if you open a trading account, you can get an 500 MQ points when you open a trading account with either of the advertiser. So MQ Trader is currently running a referral campaign where MQ affiliates can get a bonus of 1000 MQ coins for each successful referrals within the campaign on top of their usual recurring rewards. So referral accounts needs to be opened before 30th of June 2023. So as like I mentioned just now, the campaign ends this month. So do sign up and start referring now. So for our MQ members, you can get a 300 MQ points as your check-in reward for tonight. So you just need to take a screenshot of any part during this webinar and upload it inside a quiz email that will be sent to your email after the webinar ends. So you can screenshot it during any part of the webinar to claim the 300 MQ points. We'll be sending out the quiz email to all who registered for the webinar only. So if you haven't registered for the webinar, we encourage you to register now because you can get our post-webinar updates, like the quiz email to claim your 300 MQ points, and also our webinar recording. So just a gentle reminder, if you want to get a 300 MQ points as your check-in reward, you need to upload the screenshot inside the email. And before our webinar ends, we will also have a Q&A session. So please feel free if you have any questions want to ask, you can ask during the webinar. And right after that, we will have our mysterious gift session where we will give up to a gifts worth up to 249 ringgit. So make sure if you want to win our gifts, stay until the end. So for our speaker tonight is Mr. Nick Fu. He is a course instructor with an investment banking background and was an equity analyst and the lead course lecturer in 2 well-known local investment banks for 8 years. So he personally also has trained many investment banking retail and institutional clients himself. So Mr. Nick will be sharing with us an in-depth analysis of future stars of the Asian market, which is Singapore. So we'll discuss about the deglobalization, the key economic indicators, stable stocks versus growth stocks, and most importantly, what are the advantages of the Singapore market? So are you guys ready for them to know more about Nick's sharing today? Can you please type ready in the chat box to let us know if you are ready to learn more? Okay. So since everyone's ready, let me invite Mr. Nick to share with us right now.
Hello, good evening, ladies and gentlemen. Hi, Robin. Thanks for introducing me. Okay, I think everyone is ready. Are you guys ready? I think you guys already typed it. All right, good evening, ladies and gentlemen. So before I start tonight's webinar, so I would like to ask everyone about the market. So do you guys think that the market is going to enter recessions? Okay, we don't talk about the economy, whether the global economy is going to enter a recession. But why not we talk about the stock market? If you think that the stock market is going crash, all right? If you think the stock market is going to crash, please type 888. Okay. Okay, Jeffrey can talk louder, not clear. Full. Can you hear me now? Hello. Yes, okay, that's good. Right. So my question is, do you think that the stock market is going to crash? If you think the market is going to crash, please type 888. All right. Hey, sorry, please type 444. I prefer 4 to 8. Right. If you think the market is, the recent volatile or choppy market is already over, then please type 888. Right. So some of you, okay, reply to me okay, by typing 444. So you think the market is going to crash? Okay, now I just want to get some information, right, from you guys. Okay, soft landing, yeah. Okay, so I think most of you guys think that the market is going to crash, but the problem is whether it's a soft landing or hard landing. That is the main. Okay, I mean, can increase the volume. All right. Okay. Here, PC sound is soft. Okay. Let me check my audio. Okay, maybe I need to select speaker. Hopefully you guys can hear me clearly. Can you guys hear clearly now? Okay. Oh no, due to the most. Okay, your side volume is good. Thanks for your reply. Okay, there's a comment from Kelly. Oh no, due to 2:8 ratio, most of the people think that crash tank, it won't crash. I'm not sure whether it will crash or not, but today or tonight, I'm going to share with you what's my take about the stock market in the second half of this year and next year. Okay, without further ado, let's start tonight's webinar. So I'm going to roughly introduce myself again as what Robin mentioned just now earlier. All right. Yep, I'm a former two prominent investment bank equity analyst, Hong Kong and CIMB Investment Bank, and former Chinese business radio guest DJ, and currently I'm a Singapore Exchange Academy speaker, and also a CGS CIMB keynote investment speaker, and a columnist of 智慧马股360. All right, let's start tonight's topic is about uncovering the future stars of the Asian market. All right, as usual, disclaimer, I think the terms or the information content in these presentations are for discussion and educational purposes only, yeah, ladies and gentlemen. All right. So, and I'm not going to recommend any stock, buy or sell. No, all right, ladies and gentlemen, I hope you understand. Right, let's talk about the global issues, man. I think the deglobalization is already happening. All right, I think it's already happening, and the globalization has reached its final chapter, ladies and gentlemen. And let's look at the history, a historical evolution of the deglobalization. I think in 2017, I think everyone knows about this guy, Trump, 45th president of the US, and this is the one who initiated the deglobalization. All right, he's the guys who started the deglobalization. Now, before that, all right, before he started the deglobalization, he initiated the US-China trade war. All right. Okay, then followed by this outbreak of COVID-19 that accelerated the deglobalization. And of course, we have this Russian invasion of Ukraine. This, lucky, accelerated the deglobalizations. But of course, in 2022, US inflation at 40 years highs, and also the Federal Reserve, tighten the financial condition, increase interest rate, right? So they take back all the money from all the hot money from around the world. And of course, the global economy is supposed to slow. This is why just now I try to ask you guys about your thinking about this, whether the global economy or the stock market is going to crash. So I think everyone is talking about that. Okay, no doubt. But the problem is how bad, how serious the recession is, right, ladies and gentlemen? And I think the countries worldwide are also dropping the US dollar, de-dollarizations, especially the BRICS country, right? China, Russia, Brazil, and ASEAN. Right. I think if you guys notice that over the past 1 to 2 months, even including our country, they are talking about using their own country currency. okay, to do the export and import. Ladies and gentlemen, I think this is quite obvious. And I think the China-US split is forcing a lot of small countries like us, like Singapore as well, to choose sides. Okay, you want to, you want to choose China or you want to choose US. So now, yeah, this I think currently is a difficult, a challenging time for the small countries to choose sides, right? So I think all the great changes are preceded by chaos, ladies and gentlemen. So why not we try to look at these key economic indicators? So whether I mean, you make the decision. I'm going to show you some of the key economic indicators, which indicate whether the global economy is going into these recessions. Yeah, ladies and gentlemen, I think the first key economic indicators will be the GDP. All right. Now, when you talk about this recession, everyone, I mean, the first key economic indicators finally will be GDP. Now, okay, recession happen or recession take place when the countries experience or undergoes 2 consecutive quarters of negative gross domestic product growth. Now, if you look at US GDP, okay, in 2020, the US underwent 2 consecutive quarters of negative GDP growth, all right? And then, wow, there's a big jump thereafter, right? Then, of course, I think in 2022, it's slightly, underwent a 2 consecutive quarters of negative GDP growth. But you can see the US GDP, growth trend is very bumpy and very choppy. So this kind of, shape, we call it W shape. All right, it's a W shaped recessions. And this is definitely a very painful W-shaped recessions, ladies and gentlemen. That's why when we trade, all right, I mean, over the past 1 to 2 years, I think you can feel it, ladies and gentlemen. Am I right? You can feel it when you do some trading. When the share price up, then maybe up for a while, for a few days, then you retraced. Am I right to say that? So the stock market is volatile as the US GDP growth rate. All right, ladies and gentlemen. And if you look at the developed country GDP, all right, such as Germany, all right, if you look at Germany, I mean, everyone knows that Germany is one of the should be the I mean, economy-wise, okay, Germany is I mean, it's the biggest economies in European Union. All right. So if you look at Germany GDP growth rate, it's also bumpy and very choppy. All right, like the US GDP. Right. Look at France, England, right? Even though Japan, right, the GDP growth rate is very volatile. Ladies and gentlemen, that's why our stock market is also volatile. Ladies and gentlemen. Now we look at other key economy indicators such as the unemployment rate. Now we don't talk about this unemployment rate first. Okay, let's talk about this technology layoff. This table. If you look at this table in okay, the first quarter and second quarter of 2020, there are quite numbers of employees laid off in the technology industries, right? But after that, I mean, it's steady, right? But in 2022, the second quarter, third quarter, and fourth quarter, the numbers of employee layoff increase. Am I right? And then especially in the first quarter of 2023, right, the numbers of employee layoff, wow, skyrocketed, ladies and gentlemen. All right, it's higher than the one in 2020. All right, which the outbreak of the COVID-19. All right, so I think this is quite obvious. Yeah, I think this is quite obvious. And if you look at the technology layoff by industry, all right, the green histogram is the represent 2023. So if you look at the green histogram, especially the retail, consumers, hardware, healthcare, and food, right? The number of layoffs is quite high, right? So all these all the industry, all the companies in this industry fired a lot of their staff, right? This is quite obvious, ladies and gentlemen. Okay, now we are looking at this U.S. unemployment rate, ladies and gentlemen. Now, some people might ask me, "Hey, Nick, you say and the economy is going to recessions, but when we look at the unemployment rate, which is low." But I'm going to show you this table, ladies and gentlemen, since 1950. All right, you can see when the shaded area indicated the U.S. recessions, ladies and gentlemen. The shaded area represents or indicated the U.S. recessions. So you can see since 1950, right, the U.S. unemployment rate will only increase or surge, right, after the recessions take place. Can you see that, ladies and gentlemen? You see, when the unemployment was rate, then it doesn't tell us anything until the U.S. GDP growth rate, all right, underwent at least two consecutive quarters of negative GDP growth. That take place, then only we see the rising of unemployment rate, ladies and gentlemen. So the current low unemployment rate doesn't tell us much, ladies and gentlemen. Okay. All right. Now, another key economic indicators will be gold. All right. Now, we have a good question here from Jason. How can we invest amidst the current economic challenges? I'm going to tell you, okay, how are you going to invest? All right, let's, Jason. Now, if you look at gold price tends to rise during times of economic turmoil, right? So now, this is the monthly chart. All right, this is the monthly chart, ladies and gentlemen. Now, if you look at gold futures prices, if you are good at technical analysis, you should be able to, identify what pattern it is. Ladies and gentlemen, what pattern it is? Yep. Anyone? Anyone can identify any pattern of this chart? Anyone? No? Okay. All right. Okay. Now look at these charts, right? This monthly chart. Okay, I get a cup, higher high, cup and shoulder. No, no, no. Oh, okay. All right. Okay, let me tell you. This is a cup and handle, man. All right, this is cup and handle. And the gold future prices already broke out of this handle here. All right, already broken out of the handle. So this is a cup and handle, and it is a positive or bullish pattern. Yeah, ladies and gentlemen. So this is another key economic indicators of a recession, ladies and gentlemen. All right. Now we look at other key economic indicators like this U.S. yield curve inversion. I believe most of you guys understand, okay, what yield curve inversion is. All right. So no, whenever the yield curve inversion take place, the global or the U.S. economy is likely to enter a recession. Okay, this is what it means. All right. Now, if we look at this red color, ladies and gentlemen, you already hit the nearly historical high, man. The yield curve inversion. Okay, ladies and gentlemen. So, yeah, I don't know whether it will happen or not. The recession, but it looks like yes. Right now, ladies and gentlemen, if you look at since 1970, whenever the yield curve inversion take place, that will followed by a recession without fail. since 1970, ladies and gentlemen. Now you look at 1970, the shaded area indicated the US recessions, ladies and gentlemen. Now before the recession took place, now we see a yield curve inversion here. All right, now look at here. The inversion, yield curve inversion happened, then followed by recessions. Yield curve inversion, then followed by recession. Yield curve inversion, recession. Yield curve inversion, okay, then recession. Yield curve inversion, recession. Now we are here. So I'm not sure whether it's going to happen again. Okay, so you make the decision, ladies and gentlemen. Okay, let's look at this Federal Reserve interest rate, ladies and gentlemen. All right, again, the shaded area indicated the US recession. Now the red line represents Fed funds rate. Again, all right, the Federal Reserve will not cut rate until the recession takes place since 1970. Right now, if you focus on this red line, you see when the Federal Reserve increase interest rate, it would never stop until the U.S. economy enter a recession. Now here, look at this before 1975 again. All right. Here also increase interest rate. Then until something happen, then they only cut rate. All right. Now after 2000, Sam, after 2000, I think this is the global financial crisis, right? After they increased the interest rate, then they saw something happening, they cut rate. All right. Now we are here, ladies and gentlemen. All right. So in other words, when the Federal Reserve is announcing that, oh, we are going to cut interest rate, and that's when you have to be cautious, ladies and gentlemen. All right. Okay. Now I talk about the core inflation, which is the green line. I mean, same as the Fed funds rate. All right. The inflation rate, especially the core inflations, right? It will not come down until, all right, after the recession takes place. All right. Then the inflation only will come down. Yeah. All right. So yeah, that's it. I want to show you guys. But of course, you see, maybe, I mean, over the past few months, some of the US banks bankrupt or shut down. The Federal Reserve might consider cutting the interest rate, which is unlikely, in my opinion, so ladies and gentlemen. Why? Because if you look at the current core inflation, which is, I think, 5.6%, and the headline inflation rate, which is 5%, is way far away from the Fed's target 2%. Right. So I think the Federal Reserve is likely to increase the interest rate next week. All right, ladies and gentlemen. Have a look at the recent US PCE, okay, which is slightly increased. So I think the Federal Reserve is likely to increase interest rate next week. Yeah. All right. Okay. Now, I think if the Fed is unable to contain the inflation, I think the worst case scenario is a recession, ladies and gentlemen. All right, now before I move on, there are some comments, right? So I would like to take some comments here. Okay, how will the continue high interest rate environment affect the Singapore market? I'm going to tell you that later on, yeah. Okay, now the concern is about workers strike around the world, ladies and gentlemen. If you look at these all points, see, workers, there are a lot of strikes around the world. Like, we have the strikes in UK, in France, Italy. Even though in Asia there are some strikes, worker strikes in Korea, Philippines. Yeah. So my main concern is this: the wage price spiral. Now we are undergoing a high inflation. Correct or not? The US having 40 years high inflations. So when we have high inflation, then we will have what? Workers strike. And then because they are asking for higher increment, they ask for, they want, they ask for a higher pay. They want an increment, right? Without increment, they can't survive, ladies and gentlemen. So when they ask for an increment and the bosses, okay, I increase your pay, but when the bosses increase their workers' salary, that will lead to an increase in the cost of productions. And that will accelerate the current high inflation, ladies and gentlemen. And when the current inflation, going higher and higher, and then the workers will strike again. All right. The strike will happen again. They will ask for an increment. And when the bosses okay, increase your pay again, and that will lead to an increase in the cost of production again, and accelerate the current inflation. So if this wage price spiral take place, right, then I think nobody can control. Right, so this is my main concern, ladies and gentlemen. If you ask me whether it's already taken place, not yet, but we are near. All right, we are near, ladies and gentlemen. Okay, all right. Another thing, I think downside risk remains in the second half of this year. I think will be the Fed rate high. I think the whole world is looking into these issues, and because of the interest rate hike over the past few months, we see a lot of U.S. banks bankruptcy, right? But I think those banks shut down, all right, or closed down, I think was just a tip of the iceberg. Yeah, I foresee more banks shut down in the second half of this year. Yeah, and another sector that I'm quite worried will be the property, U.S. property. All right. Now, when the Fed increase the interest rate, then I mean the property investor are not able to repay the housing loan. In U.S. markets, most of the property investor or property buyers, they're using fixed rate, all right, to borrow housing loan. All right. Malaysia and Singapore, I think it will be different, right? So yeah, I think this is another sector that we should pay attention to, ladies and gentlemen. Yeah. Okay. Now another top geopolitical concern. I think this is endless. Okay, this is definitely endless. This was initiated by the Trump, ladies and gentlemen. As you guys know, that the US will never stop fighting until they can defeat opponents. So I think this is definitely an endless fight between US and China. Okay, ladies and gentlemen. So okay, now if you look at this phase, the bull is exhausted. Fatigue. All right. What I'm trying to say is that if you look at over the past few weeks or months, the U.S. stock market, or especially the Dow Jones Industry Average, S&P 500 index, as well as the Nasdaq index, staged a strong rebound over the past few weeks, right, ladies and gentlemen? But in my own opinions, okay, it can be wrong or right, but in my own opinions, ladies and gentlemen, I think the bull or the recent rebound, strong rebound, is already exhausted. Okay, all right. So when the market when the rebound is exhausted, you should go for growth stocks or stable stocks. Now, it depends on your risk appetite, ladies and gentlemen. Yeah. Now, if you are short-term traders who are going for the growth stocks, yes, during a volatile market, you might gain from the volatile market, because when the market, goes down, then you buy. When the market goes up, then you sell. Right? Definitely, the volatile market is good for the short-term traders. But if you can't take the risk, right? If you can't take the risk, I will advise you, to go for stable stocks. Okay, ladies and gentlemen, and Singapore market offer a stability amidst the global volatility. Why do I say so, ladies and gentlemen? Now, if you look at this table, in 2022, all right, I'm talking about the global index performance. If you look at US S&P 500, China, Hong Kong, or even KLZI Malaysia, right, they underperformed in 2022, but the Singapore index, wow, outperformed, right? It was up by 4.1% because, all this while, over the past decade, especially in, the investor in Malaysia, always saying that Singapore stock market is a boring market. Yes, but now Singapore market is offering a stability. Okay, now if you are unable to take high risk, so you can go for a stable stock. Okay, and Singapore market can offer you that. Ladies and gentlemen, now if you look at the recent market performance, we look at Hong Kong, Malaysia, all right, it's all the way down. Am I right? But when we look at the Singapore STI index, it's quite stable. Am I right? If you look at the Singapore index, it's as cool as a cucumber, ladies and gentlemen. All right. So if you are looking for a stable, market, I think Singapore market. Okay, ladies and gentlemen, you can consider. All right. Okay. Now, why I think Singapore market is a good market for you to invest? Because I think everyone knows that Singapore is a leading or global financial center. Okay, I think there are 4 global financial centers like New York, London, Hong Kong ranked third, but last year Singapore has already overtaken Hong Kong. So Singapore ranks third in the global financial center, ladies and gentlemen. So this is one of the advantages of Singapore markets. All right, and if you talk about political stability, ladies and gentlemen, now this table is a world ranking, is the Asian ranking. Now Singapore ranked third. Okay, in Asia, Singapore ranked first. Number 1, ladies and gentlemen, we talk about political stability. In our country, I think it is still uncertain. Am I right? Especially the upcoming 6 states elections. So, yep, Singapore markets can offer you a stability, ladies and gentlemen. And corruption perceptions. All right, I don't want to talk much about these, but the table shows you that in Asia, Singapore ranked number 1, and in the world, Singapore ranked number 5. All right, and of course, I think Singapore, one of the Singapore's advantages is this geographical location. Yeah, ladies and gentlemen. Okay, I think Singapore's is one of the world's top transportation hubs for sea and air cargo. Yeah, I think Singapore's container ports are the busiest in the world. Yeah, ladies and gentlemen. All right. And if you think Southeast Asia as a country, I think Singapore is the capital. Okay. So I find that all the funds and resources from the Southeast Asia, will go to Singapore. Okay. And this RCEP may make Singapore a leading commercial and financial center in the region and encourage more cross-border capital flows between China, Singapore, and ASEAN. Yeah, so I think, I think Singapore will serve as a platform to bridge the gap. Okay, ladies and gentlemen. All right. Okay. Now, if you believe in feng shui, all right, if you believe in feng shui, Now I'm going to tell you about this night period, ladies and gentlemen. Okay, now this is the flying star chart, 2023. Okay, we don't look at the black box. Okay, we don't look at the black box. We should look at the red box. Red box represent a prosperous direction, yeah, ladies and gentlemen. Now, of course, we focus on this direction, which is south, right? Now, according to this flying star charts, the 8 white star is flying to the due south. All right. So I think the countries or the region, or I mean the countries in this and regions in this direction, which is south, I think could potentially gain some economic gain. All right, ladies and gentlemen. So south. All right. Now, if you look at this Earth, yeah, look at this Earth, ladies and gentlemen. You look at this Earth. Okay, where are we now? Okay, south. Yeah, ladies and gentlemen, south, which is Singapore. All right. Now, if you stay in Kuala Lumpur or Seremban or Malacca, south. Yeah, ladies and gentlemen, Singapore. I believe in feng shui. I think Singapore stock market will be okay. Will be the next stock market that we should look into. Okay, and because I think the resources and the the resources and talented people, will fly to Singapore. Yeah. And as you all know, that ultra-rich individuals are migrating to Singapore. Yeah, I think this is why I want you guys to look at Singapore stock market. All right, and one of the catalysts that I think we should is the China border reopenings, and this definitely will help the Singapore's tourism industry. Okay, and there are some rebound in the tourist arrival. I mean, in April 2023, the number of visitor arrival surpassed 1.1 million. That figures bring total numbers of these visitor arrival to about, I think, over 4 million. Okay, so that's why I think we should focus on this sector REITs. Okay, I think especially the hotel. Okay, hotel REITs will benefit from this. Yeah, ladies and gentlemen. Now, Singapore Tourism Board forecasts that the international visitor arrival could potentially double year on year to 12 or 14 million this year, reaching about the 63 to 45% 2019 levels. All right. So with a full recovery expected by 2024. Okay. So I think this is the hospitality Singapore REITs. Right. So this is the market's on consensus target price. I mean, if you guys want, you can take a photo of this. Okay. All right. And yeah, and another sector you can look at is the retail Singapore REITs, right? So this is, dividend yield, price to book, gearing, market cap, and the market consensus target price, right? Now, I think you guys quite familiar with this also. I think Singapore is one of the world's largest REITs and property trust markets, right? Now, Singapore REITs assets is not only based in Singapore, but also based in other countries, all right, like South Korea, Hong Kong, Malaysia, India, China, Japan, Vietnam, Philippines, and Indonesia. Okay, so there are about 42 REITs listed in Singapore Stock Exchange. Okay, unlike Malaysia, there are only 19 REITs listed in Malaysia. All right, even though in Hong Kong, I think about 11 to 12, but definitely REITs, Singapore stock market is quite popular for these REITs, yeah. And of course, there are some rules for Singapore REIT, which is quite strict. And okay, if you look at this average of 42 Singapore REITs, okay, the dividend yield is quite high. All right, as at April, 30th April, the rate average dividend rate yields about 8.7%. Okay, definitely is much more higher than the Singapore benchmark index, which is 4.7%, and also higher than this government bond, 10 years bond yield, 2.8%. Okay, and I think another sector I think you should focus on will be retail sector, because the return of Chinese tourists, I think, should further support the demand for consumer goods, right? Thai Beverage Public Company Limited. I think this is one of the counters that investors are quite interested in recently. All right, I think everyone loves Thailand, right? Right. When you go to Thailand, you want to see a beautiful things. When you see a beautiful thing, how could you not drink some alcohol, ladies and gentlemen? Okay, so I mean, if you look at the latest quarter result, which is quite good, okay, I think because of the entertainment value reopening, and I think last year they have this Thailand general election and a strong tourism recovery, especially from China. So these are the one of the catalysts, ladies and gentlemen. Okay, now if you look at the valuations, yeah, the forward P is about 11 times, which is here, and the 5-year average P is 15.8 times. So if you look at the PE valuations, the stock is currently, I would say, undervalued. Okay. All right. If you look at the from the technical perspective, yes, recently the share price plunged. All right, but I think the recent sharp decline in the share price is grossly oversold, and I think it's going to find a strong support level soon. Okay. Okay, let's look at other sector, which is the transport. I think when the China visitors will, fly to Singapore, definitely they have to take flights. Am I right? So Singapore Airlines. And if you look at focus on 30th June 2022, I think the third quarter, if I'm not mistaken, it managed to turn around. All right. I think you guys know that there are a lot of airline, not talking about Malaysia, maybe other countries, most of the airline is a loss-making company. All right. Unlike Singapore Airlines, it managed to turn around. Okay. And currently, all right, is experiencing or undergoing 4th consecutive quarters of net profits. Right, that is why share price broke out of this triangle pattern. Right, should be already broken, ladies and gentlemen. Sorry about that. It should be broken already. So share price already broken out of this triangle pattern, and of course the current level is quite stretched. All right, so I would say you might, I mean, if you look for a share price to retrace, right, before you consider to. All right, okay. Now another sector will be travel. I mean, if you are China visitors, when you come to Singapore, so you must go to this Resort World Singapore, Genting Singapore. Am I right? Because this Resort World Singapore features 6 uniquely themed hotels. They have this casino, water park, Universal Studios. Okay, so I think China visitors definitely will go to this Resort World Singapore, ladies and gentlemen, because there are so many entertainment options. Okay, now if you look at this Genting Singapore valuation, which is enterprise value divided by EBITDA, it's currently trading at 8.1 times, which is slightly, I would say the current EV divided by EBITDA of 8.1 times is within the ambit of the the 5 years average EV divided by EBITDA. Okay, it's fairly value at the current level. Now, if you look at it from the technical perspective, okay, I think this is look attractive. Why? Because after share prices broke out of this triangle pattern, right? Share prices went up, and then currently is undergoing a retracement. All right. Okay, as long as the share price can stay firmly above this horizontal black line, that will represent another good opportunities. All right, ladies and gentlemen. Now, I think that's all about my slides. Okay, that's all about my presentation for tonight. So yeah, here's a marketing thingy, right? If you want to trade foreign stock, I think you may consider opening an account with equities. Yeah, ladies and gentlemen. All right. So okay. Now we don't know whether there will be a black swan event in the future or in the near future. All right, but we have to be cautious. All right. So your for the time being, your strategy will be, I think, will be short-term trading instead of a long-term investment, right? Because we don't know when the market is going to crash. We don't know when the economy is going to enter the recessions. So yeah, your strategy will be the short-term trading strategy, ladies and gentlemen. So stay cautious and always cash is always king, ladies and gentlemen. All right, so whatever I say or information contained in these presentations are for discussion purposes only. All right, not recommend or making any recommendation, ladies and gentlemen. Please take your own risk. Okay, thank you very much. So, yep, this is my Facebook page. You can follow. Yep, that's all about my presentation for tonight, webinar. Thanks. Any questions? Yeah, I think there are a lot of questions, right? Okay, let me take a few questions from the floor.
Hi, Nick. I think I'll take over from here. Then later
Okay,
I
sure.
will give you the questions. Yeah.
All right.
Okay, let me share my screen first. Okay, so once again, thank you, Nick, for the in-depth sharing session about the Singapore market. And to all our viewers, thank you for tuning in. And we'll start our Q&A session after this. So if you still have any questions, please feel free to type them out in the chat box and let us know. And if any of you are interested to know more about trading in the Singapore and our campaign in the Singapore market, you can scan this QR code to visit this link on the screen for more information. Now, you can also join the SGX Invest Telegram channel to get their latest market insights in Singapore. So you can scan the QR code if you want to join their channel. Now, for non-MQ members, remember that you can get all the free access to this system by opening a trading account with our selected advertisers as shown on the screen. So if you are interested, want to use our system, you can type 5 in the chat box to scan the QR code or submit your contact details. Then the respective team will guide you on the next step later. So, and also just to highlight that if you open a trading account with our advertiser today, you can get an extra 500 MQ points. So we also are running a referral campaign where MQ affiliates can get a bonus of 1,000 MQ points for each successful referrals within the campaign on top of their usual recurring rewards. So remember that the campaign ends this month, so do sign up and start referring now to get the 1,000 MQ coins bonus. And also remember the 300 MQ points as check-in reward for tonight's webinar. So you just need to screenshot and submit it in the quiz email after the webinar ends. And remember that you need to register the webinar first in order to receive the quiz email. As you can see, here's the link to register the webinar. And if you register, we will also send you the post-webinar updates like the webinar recording to your email for you. So those who haven't registered, you can register now. Like I said, I will be having a Q&A session later, so please feel free if you have any questions. So right after the Q&A, we will also having our mysterious gift session where we'll be giving gifts worth up to 249 ringgit. So make sure you stay until the end if you want to win our gifts. So we'll start our Q&A session now. So the first question of the night is from Matt Heaven. This question is about, out of the topic, but was thinking, what is your suggestion on REITs investing, both Malaysia or Singapore?
Yep. I think I already answered to that question just now. All right. I think you look at Singapore always below for REITs. All right. Now, in terms of the numbers of REITs listed in the stock market, I mean, there are 42 REITs in Singapore, listed in Singapore, whereas there are only 19 REITs in Malaysia. And if you look at this in terms of assets wise, right, most of the Malaysia REITs assets are based in Malaysia. If I'm not mistaken, there's only one Malaysia REIT, which is, if I'm not mistaken, which is the YTL REIT, right? One of the assets in Australia, if I'm not mistaken, right? So compared to Singapore REITs assets is quite well diversified. Okay, so you can find the assets in other countries. So this is one of the advantages. All right. So I would prefer Singapore REITs to Malaysia REITs. Yeah.
Okay, and actually, if you want to learn more about REITs, we also have previous webinar session on our MQ event, MQ Dummy as well. You can watch it after the webinar ends also. So moving on to our second question is from Mina. Her question is, how will continued high interest environment affect the Singapore market?
Again, come again. What question is it?
Okay, how will the continued high interest rate environment affect the Singapore market?
Definitely the high interest rate will affect Singapore quite substantially, because Singapore is okay. If you look at the Singapore economy, ladies and gentlemen, I would say the trade to GDP ratio is more than 300%. So the Singapore economy is quite dependent on the global trade. All right. So when the US and the China, I mean, the fight definitely will affect Singapore exports. Okay. So what the Singapore's MAS, okay, the Monetary Authority of Singapore, what they will going to do, they will definitely will adjust the exchange rate, okay, to deal with or cope with this high interest rate environment. Okay, but when we look at the Singapore stock market, just now I already show you guys. I'm talking about the STI index. Is not affected that much. Okay, it's as cool as a cucumber as compared to Malaysia's stock market and Hong Kong stock market. Okay, so I think in terms of the stability, I think Singapore stock market is still okay. Okay, for Malaysia investor to invest. Yeah.
Okay, so we will move on to our third question, the last question for the night. It's from Brandon. His question is about, are there any potential risks and challenges we should be aware of when investing in Singapore in near future?
Yeah, as I mentioned earlier, all right, Singapore economy is quite dependent on the global trade. All right, because the trade to GDP ratio is more than 300%, as I mentioned earlier. So this is one of the biggest concerns or risk or challenges that the Singapore is going to face. Okay, as I say, US will not stop fighting against China. Okay, so and US and China are one of the biggest trade partners with Singapore. Okay, so if the US-China war or trade war is still ongoing, so definitely will affect Singapore economy. Yeah.
I see. So in the end, it depends whether if China wants to continue fight with US, then it will affect the Singapore economy, right?
Yeah, as I say earlier, the US will not stop fighting until they can defeat the opponent, which is China.
Okay. Thank you for the answer. So
Right.
I believe that sums up for our Q&A session and the sharing session from Mr. Nick Fu. So once again, very thank you, Mr. Nick, for sharing with us your insightful insights.
Thank you for
So
inviting me
yes,
also. Yeah.
yes. So that's all for Mr. Nick's part, and for our non-MQ members, remember that you can gain free access to our system by opening a trading account with our selected advertiser after the webinar ends. So if you are interested, you can type 5 in the chat box to let us know, or scan the QR code on the screen to submit your contact details to us. Then afterwards, the respective team will contact you and guide you on the next step later. So we'll be starting our mysterious gift session now. So remember, in this session, you can win gifts worth up to 249 ringgit. The rules are very simple. I will show the questions and answers options on the screen. Then you all just need to type out the correct answer in the chat box. Then there are total 3 questions. So for each question, we will choose the first 2 persons who answered correctly to be the winners. And if you have won it before, like you win it in the first question, so in the next question, we'll pass the chance to the next person who wins the reward. So everyone actually gets a chance. And for winners, remember to please send us your contact details through the Google form that we will send in the chat box later, so we can actually arrange to send the gifts to you. So I hope everyone's ready. I will now start with the first question of Mystery Gift. The first question is, according to the performance in 2022, which country offers the best stability amidst global volatility? Is it A, Vietnam, or B, Thailand? Okay, I believe this question is very simple. So the correct answer is C, Singapore. Now let me check the first 2 persons who got it correct. Remember, if you are the first 2 persons, remember to send us your contact details via the Google form. And the first 2 winners are Jeffrey and Victor Aoyong. Congratulations. So now we're moving on to the second question. What is true for Singapore REITs market? B, is it B, one of the world's largest REIT market? Or is it C, 90% of Singapore REITs are retail REITs? Oh, I see most of you got it correct. Okay, so for the answer of the second question is B. Singapore REITs market is one of the world's largest REIT market. So let me check the first 2 persons who got it correct is, congratulations, Lee and Kelvin. So remember to use the Google form in the chat box to send us your contact details so that we can arrange the gifts for you. Okay, thank you, Jeffrey. So now moving on to our last mysterious question. The last question is, other than REITs, what other sectors in Singapore market did Nick mention in his sharing? Oh, I see this one, everyone is quite fast. Okay, so the correct answer is A, the retail sector. So the first two person who got it correct is Tay888 and Yuk Long Liao. Congratulations. Remember to send us your details via the Google form. Now that sums up for our mysterious gift session. Thank you for participating in it. And just to share with you all, MQ Trader is currently running a referral campaign where our MQ affiliates can get a bonus of 1,000 MQ coins for each successful referrals. So basically, if you join our MQ affiliate program, you can get your usual recurring rewards and also a bonus of 1,000 MQ coins if you join us during this period. Now, the final date to join the MQ affiliate is 30th June. So if you're interested, you can use the links inside the chat box or scan the QR code on the screen. Now for MQ members, remember that today you can get a 300 MQ points as check-in reward. You just need to screenshot the webinar. Anytime also can screenshot, then upload it inside the email which we will receive after the webinar ends. Can I have the QR code to receive post-market updates? Yes, after this, I will still keep the webinar live for a few minutes so that you can browse back the QR code. I will click it back for you. Yeah, here's the post-market update for Reach. You can scan the QR code right now if you want to register. You can receive the post-webinar updates include the webinar recording and also the quiz email to claim your 300 MQ points as check-in reward. So I will pause a few seconds if any of you are interested to sign up for it. Okay, and for the last one is for non-MQ members. Remember that if you are interested in any of our systems like our MQ affiliate, MQ points, or even our MQ stock trading system, you can get it for free by opening a trading account with our selected advertisers as shown on the screen. So if you are interested, please type 5 in the chat box or scan the QR code to submit your contact details. MQ Trader will be organizing webinars at least once every month. So we'll also be organizing giveaways time to time. So make sure if you are interested or you like any of these, you can like and follow us on Facebook or Instagram. Just search for MQ Trader so that you won't miss any of our updates. Brian Tan, TA Securities is one of our selected advertisers. So if you are interested, you can use the QR code just now and they will contact you afterwards. You can also follow us on our i3 Investor page to get our latest updates or even download the MQ Chat app on your phone to get the full features of i3 Investor. So once again, a very big thank you to all of you who have participated in this webinar. And with each of our participation, you certainly made it to a greater success with it. So thank you all for staying through. I sincerely hope that all of you have learned something today. I will now turn off my camera, but still keep the webinar live for another few more minutes so that all of you can refer back to the links or the QR code before it's gone. So once again, thank you all of you for participating in our webinar tonight. I'm Robin from MQ Trader. I wish you have a great week ahead. Thank you.
Thanks for watching.